Hey, it's the Profit Answer Man, Rocky Lalvani. Today, I'm going to start with a quote from Alan Watts. What do you desire? What makes you itch? If you say that getting the money is the most important thing, you will spend your life completely wasting your time. You'll be doing things you don't like, doing in order to go on living, that is, to go on doing things you don't like doing. While I love profit, pursuing money is not the end game of life, but it does make it a lot easier. If you're new and haven't heard my interview with Mike Michalowicz, check it out. It's episode 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. 80% of business owners hate accounting. I don't blame them. They're not accountants and they don't want to be one. However, you need someone on your team to help you make good financial decisions. Many bookkeepers and accountants are bad at this. Plus, they don't think like you do. The goal is to ensure that you have the time and freedom to do what you love. Remember, more revenue does not equal more profit, and that's why we focus on the bottom line. Today, our guest is John Briggs, who is the founder of Insight Tax and Accounting and the author of Profit First for Micro Gyms. His accounting firm has more gym clients than any other firm in the country, as well as thousands of other client-driven businesses. He's also the owner of a gym, GSL Fitness. Through all of this, he has learned that achieving a highly profitable business can be overwhelming, particularly with the barriers and unknowns that new owners are faced to deal with. Entrepreneurs can quickly become stressed and burnt out, and often sadly give up on the mission that they set out for. In much the same way that the body needs blood to survive, a business needs cash. The lifeblood of a business to stay healthy and to grow more resilient. I put a link to his practice in the show notes. While John focuses on micro gyms, the principles apply to your business. Let's meet John. Welcome to the Profit Answer Man podcast, John Briggs. It's great to have you.
Thanks, Rocky. I'm glad to be here.
Can you share with the audience a little bit about who you are and what you do?
Sure. So I'm a mastery level Profit First professional, and my firm, Insight Tax, we have about 23 team members right now, and we really love helping business owners, stick it to the IRS and keep more money in their pocket through good cash flow management systems. We focus a lot on helping fitness professionals with the Profit First system.
And so we'll talk a little bit more about the tax because we always have this battle of more tax or less tax, or should I say appropriate tax. But before we get there, I'd love for you to share your story with the audience about the company that you were working for and how they were flush with revenue, but somehow went bankrupt.
Yeah. So, you're probably familiar with Parkinson's Law. And so as a recap, it's just the demand for something will always expand to match the supply. And man, did I live this experience. The company is a door-to-door sales company. So it's run by sales reps. In fact, the best, most successful sales rep had been promoted to president the previous year, which is a terrible way to promote somebody. So we, it's a little bit after September, and I'm sitting in my office, and the president of the company comes running in to my office, and he's like, "John, you better lock the doors and not let anyone know you're here, because all those checks that we cut last week, they're bouncing right now. And if you rewrite any of those checks and then give them to sales reps, they're going to bounce too." Like, okay. Which, I mean, it's kind of interesting because as an accountant, especially as the controller for this company, kind of a boring job. And so it's like, well, this is a little exciting. And maybe the president's being slightly over dramatic. So I'm like, dude, what is going on? Well, the owner of the company had been working on trying to get a loan for all these sales rep commissions that were due to the sales reps for all the sales that they earned. And he didn't get the loan. So they're $1 million short and all these checks are bouncing. What's really ironic is literally the week before, we celebrated our year-end celebration and patted all these sales reps on the back for doing such a good job. They spent way too much money on the event. They wanted me to somehow figure out how to put $10,000 of cash into a glass bowl. Luckily, our bank was like, you need a lot of leeway to get that type of cash. I mean, I'm sure they thought we were drug dealers. Anyway, so it's like we handed out these checks, $10,000, $20,000, $30,000 checks to these sales reps, and now they're bouncing. And of course, they're going to come and ask us for it. And so I'm like, how is this possible? We literally just celebrated the largest revenue year for the company, close to $30 million in revenue. $30 million in revenue. And they can't cover the sales rep checks. They totally mismanaged the money. I mean, these guys literally were the poster child for Parkinson's law because they had the one bank account. And when there was money in the account, they decided, yeah, it's available to spend. Let's spend it. I mean, that's what Parkinson's law tells us. If you have one bank account, the cash available to spend is going to get spent. And they, didn't do any sort of prudent things like having a separate bank account for sales commissions. That would have been a novel idea. It also would have saved them from, not being able to cover sales reps. And in this case, because the paychecks bounce and the sales reps are the lifeblood of the company, as a $30 million business, it declared bankruptcy.
It's funny because we talk about this a lot. Sales reps always tell you got to spend money to make money. And that's not always true. You've got to spend money appropriately to make money. But I have found sales reps and spending money go hand in hand. They just have no concept of how not to spend money because that's their lifeblood, right? We gotta spend. This is how we grow. And it's like, whoa, y'all need to take a chill pill. And the thing is, nobody is paid to say don't spend or spend less, and that's part of the problem. But that's what Profit First helps people to do. So out of curiosity, how did you learn about Profit First?
I was part of a program run by Goldman Sachs called 10,000 Small Business. And after graduating through this course, which is super awesome, and if you qualify, it's a free MBA for your business, basically. Super valuable program. And once I graduated, an alumni from a different location was reaching out, looking to interview people for her podcast based on their experience with this Goldman Sachs program. And so I reached out to her and we got it talking, and she starts going off with so much enthusiasm for this book that she didn't even write, but to her changed her life. That book happened to be The Pumpkin Plan by Mike Michalowicz. And so I'm like, well, that's interesting. I don't typically like pumpkin bread or pumpkin pie, but I like the concept of growing a giant pumpkin. So I bought the book and really resonated with Mike's voice and the way he speaks to entrepreneurs. And of course, in his book, he references Profit First. And then I see that it's already published and everything. So I'm like, obviously as an accountant, I have to read this. And as I'm reading the first couple chapters, I'm thinking all of my clients need to read this book. This is exactly what all my clients are running into. I mean, of course, I was running into the same problem as an owner, but I was a little too egotistical at the time to realize that I also needed help. Instead, it was, my clients need this so badly. And so in my mind, as I'm listening to this book, I'm thinking, I should reach out to him and see if there's any way I can learn his system and figure out a way how to implement it with my clients. And then lo and behold, he actually had the company already set up, Profit First Professionals. So the book led me to the organization. I met with Mike and Ron, and obviously it made sense. And so I've been doing this for, I think 5 years now. Not one of the newest or one of the oldest people, but I definitely joined pretty early. Anyway, so that was my journey, finding Profit First and finding Mike and all the other good stuff that he talks about.
Yeah, I always find I'm married to a CPA, so I'm allowed to make these comments. It surprises me though, and it was a major aha. Here you are as an accountant, and yet this simple book and this simple plan changes the way you look at things and the numbers. And that's why I tell most people your accountants aren't there to make you profitable. They're great at putting numbers where they belong on spreadsheets and helping you with your taxes. But most of them are not focused on making sure that you're phenomenally profitable.
Absolutely. And I'll be honest, it's one of the biggest things I have to train into or recondition my team. Because look, guys, we don't do just compliance. Yeah, we do that because it has to get done. But the value we add to our clients is the advisory services of helping them see how their cash flow can be better. They can technically go anywhere and get something filed. And while it might not be correct, it's going to be less expensive for them. They actually want us to tell them where they're making mistakes, and they want us to tell them what they need to do to fix it. But here we are, a bunch of accountants who, I've inundated with the Profit First methodology, and still on a regular basis, I have to keep encouraging them to be advisors instead of just the plug and chug CPA.
It's a different way of thinking. And I've that's where a lot of my ahas came with Profit First. When I first read it, and I'm like, what do you mean business owners don't understand the business of business? What do you mean they don't look at their financial reports? How do you run a business and not do this? It was shocking. So you like to specialize in the gym area, especially. And for me, I always look at money and fitness to me go together. I mean, they even like Parkinson's law, right? You're going on a diet. The simplest way to go on a diet is get a smaller plate. The simplest way to spend less money is get a smaller bank account, right? And it automatically helps you to do that. And I also find people who lose weight increase their income. It's weird how that happens. I don't know what you've seen.
I definitely have seen that, what you just described. If someone is finding success in becoming healthier, those disciplines that they've applied to becoming healthier automatically overflow into the other areas of their life. But on the other hand, especially working with gym owners, I guess it's a little bit different because these guys have been healthy for most of their life. There's not very many of them that are very good with their money. Oh man. Which is why, I wrote the Profit First for micro gyms specific for them to help them, adapt the system for their needs. But I do encourage them often with what you just said, that, look, you guys understand fitness already. You understand nutrition already. So a lot of these principles you already get. I'm just going to help you understand them, how it applies to your money, as opposed to how it's applying to you and your client's fitness. And so they grasp on really quickly to the principles, and those who do it start having success. But until they find the system, a lot of them are kind of in some difficult scenarios with not a lot of cash to show for all their hard work.
And that's true of all business owners. They all have that kind of an issue, and that's what we're here to solve and make it go much, much easier for them. So this year especially, I know depending on where you are in the country, a lot of gyms have had to struggle because they've been told to close and they've had to pivot. What have you seen in the ways that they have been able to pivot? A lot of them. So I guess let me first describe the micro gyms that we work with and that I write to in my book. Those are the types of gyms that have very high touch, high accountability with their members. So they're like the CrossFit gyms or the Berry boot camps or Soul Cycles, where there's a community, and these guys are typically paying $100 or more a month for their membership.
which is different than the 24-hour fitnesses or Planet Fitness companies, where their model is to rent equipment and they have a much lower fee, anywhere from $5 to $20 a month. Well, after a month of COVID closures, or like basically in April, Gold's Gym permanently closed 32 locations and filed for bankruptcy. 24-hour Fitness permanently closed 132 locations and also filed for bankruptcy. And those are just the two that I found when I was doing some research. I'm sure if I looked into it, we'd find a bunch of permanent closures from gyms that way. And unfortunately, the micro gym model wasn't completely free of that. They're just in a little bit of a better position because they found a community, and have that. A lot of these members were very loyal to them for a couple months, and they kept making payments. And so in order to provide value, they moved to online classes, for example. Hey, we'll do a Zoom class. I'll show you the movements. I'll start the timer. I'll encourage you, that type of thing. Since then, I know there's a handful of gym owners that we've worked with that have moved completely virtual, and they're just going all in. They liked saving the money on the retail space, and so they're going that route. Others are trying to do like a hybrid model, and others are really just hoping that this blows over so that they can go back to how things were. Now, will things ever go back to how they were? I don't think anyone can predict that at this point, but I don't always think waiting around and hoping is the best plan. I think there's, like right now, everyone should pivot somehow if your sales have suffered because of COVID. It doesn't mean you can't go back to how things were if things go back to normal, but you have to find the cash, because profit first starts with cash coming into your business. Then you have the systems in place to maintain as much as your cash left over as possible.
And that's important. And I know early on, Mike did a ton of interviews and a ton of information about how do you pivot and pivot quickly. And his main point was the first ones to pivot are the ones who are going to win. Now, we're late in the game, but it's never over. You always have the ability to continue to pivot and try something new and go forward. So one of the things I've heard you talk about, and I know it's one of the core principles, you talk about productive expenses versus not productive expenses. What do you mean by that?
Well, usually when a business owner talks to an accountant and they're like, hey, accountant, I need help analyzing my expenses, accountants go directly to this variable versus fixed concept. Oh, well, you need to look at your variable expenses. Those are going to change based on blah, 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 and fixed blah, blah, blah. It's the same. And I kind of argue, in the grand scheme of things, those two concepts are completely irrelevant to the typical small business owner. What the two types of expenses that they need to focus on instead, which is going to be more effective for them, is this idea of, is this expense productive for my business or not productive? Instead of trying to figure out, is it the same amount every month or does it change? We need to be figuring out, does this expense actually serve my clients, bring in more revenue? Does it make me more profitable? Does it leverage my time, which then allows me to spend time doing other things, which then bring in more money? Or does it not fit into those categories, in which case I probably shouldn't have it? If I look at all my expenses, we want to identify the ones that actually aren't doing anything for your business, and then let's eliminate them. For a gym owner, for example, we often find they'll have multiple music subscriptions because most of us want to listen to music when we work out, and we want it a little bit loud so that no one else can hear me breathing so heavy. Well, they end up having at least multiple subscriptions. It's like, do you need all three of these? Okay, let's cut that back. All right, you're paying for this CRM software. Let's look at all the features. How many of these features are you using? Oh, looks like you can drop down to the middle tier instead of the highest tier because a lot of these features are not productive for you. So let's reduce that cost. It's those types of things that we're suggesting. Most business owners, we kind of are prone to shiny object shiny object syndrome. And this is the best way, I feel like, to overcome that temptation, is asking myself, is this actually going to move my business forward in the way that I want it to be moved forward? Or is this just an expense I think I need, but actually isn't going to do anything for the profitability or the quality of service for my members?
One of my clients, his profit is up 300% this year because I helped him with shiny object syndrome and we stopped it. So no more shiny objects. He's got to get approval first. And because of that, his profit is skyrocketed. And because his profit is skyrocketed, now he looks every month when we do the profit allocation, he sees how that number keeps growing. And he's like, okay, I can stay away from things now. Because that number is the counterbalance to, hey, I want this or I need this, which, you know, wants and needs or need to appropriately be done in the appropriate way. So let's get to this tax question, because a lot of times there is always this question of we should pay less taxes. And I hate paying taxes, so I'm all for less taxes. But if we pay too much to pay less taxes, I think it's a problem. And everyone, you know, business owners, as much as we have shiny object syndrome, we have, well, it's a tax deduction syndrome, right? We spend money like crazy because we're going to get a tax deduction. And it's absurd to spend $1 to save 23 cents. So how do we appropriately do this?
Yeah, you know, yeah, and for some business owners, it's 40%, but even that's crazy, right? Like if you think about your business as the dog and you have the tail, which is tax, you would never let the tail wag the entire dog. Like, I can't tell you how often I get the question at the end of the year, like this time, hey dude, should I buy a boat? I don't know. Should you buy a boat? Is that in your plan? Do you have the cash available? Is it going to put you in a bad situation?
It depends if you're a fisherman, right?
Right. Well, I thought I could find some write-offs. You're going to spend $30,000 for a relatively aggressive tax deduction. Uh-oh. Oh, good. Sorry, I thought my power just went out. You're going to spend $30,000 on a really aggressive tax deduction to save $3,000 in tax? Like, dude, how about you just pay the $3,000 in tax and now you have the $27,000 to actually do something with it, like value creation or serving your members or growing your business. So
we're taking your family on a vacation or saving for retirement or building that fund that will help you survive times like these.
Exactly. So the best way to do it, you know, this is why I love the tax bucket in the Profit First system. You're automatically setting aside money every time you sit down and look at your cash flow, which at the minimum should be twice a month. So now you're setting aside a small amount. You don't feel the pain, but by the end of the year, you have a nice balance accumulated. So now all of a sudden, I already don't have to make bad decisions because I don't have the cash to pay for tax. Because a lot of times that's what's going on. Dude, should I buy a boat because I don't have the cash to pay my taxes or what I think my taxes will be? A lot of those questions come from just poor planning and poor cash management. The other side is, find the tax strategies that make sense, reduce your tax bill as low as possible, but know that the more profitable your business becomes, you'll have to pay some tax. You might as well set aside money for it and instead, you know, be smart about the way you save taxes. So some of those smart ways, like right now, before the end of the year, if you're a business owner and you have equipment you're planning on buying in the next 3 to 4 months and you have the cash available to do it, go ahead and buy it now. That's a smart way to save taxes. It's a cash flow expense you're going to have, you know you're going to have, you know it's a productive expense, but by accelerating it to this year, you're going to save some taxes. The same goes with basically any expense that you can prepay that you have the cash available to do. That's the key there. Don't ever put yourself in a scenario where now you're stressed to pay your normal operating expenses. But if you have the cash flow available, prepay some of those expenses. So now going into the next quarter, you've already paid for some of those expenses, you've reduced your taxes, and you can still focus on growing your business instead of focusing, how do I spend $1 to save 40 cents? Or in other words, how do I spend $1 to burn 60 cents? Because again, if you talk about productive versus non-productive, a lot of those cash spends that people are looking at are non-productive expenses. And that does nothing for our wealth creation. It is better to pay the tax than it is to waste it on something that doesn't create wealth for you.
And that is so true. And that's why I try and tell people to do what's appropriate. And also putting money into retirement accounts allows you to get the tax deduction while keeping your money and allowing it to grow tax-free for a while at least. So that's always another great way to do it. One of the other things that I think people also struggle with, because it's counterintuitive, is we talk about a smaller amount of customers or products, but bigger profits. And I think people struggle with this. What have you seen?
Yeah, one of my favorite metrics is profitability per customer. So a couple examples. I was working with a guy, and he was a consultant, and he had this client who represented a few $1 million of revenue to the company. But once we looked at the profitability on that customer, his margins were like 2%. He's had all this payroll going out, like, to support the workload that they committed to as a company. And it's like, you actually are going to increase your profitability if you fire this client, because now your team can work on other people who aren't as needy. Because ultimately, while it was $2 million of revenue, he underquoted them, but he felt like giving them a discount because of such a large number. So there's that element. On the other side too, I think about, what if your highest paying client pays you $70,000 a year versus having 70 clients at $1,000 a year? Your quality of life is so much better with the one client at 70,000 than to make the same amount of revenue serving 70 clients. And so we think everyone should always look at the profitability of their customers, the profitability of their service offerings. A lot of times you can find things that are hurting your profitability just within that. And I know we talk about the Pareto principle a lot. It's almost to the point where it's pretty cliche. 80-20, but it's still true. You're going to have at least 20% of your clients that, or 80% of your clients, that aren't really adding to the top line or to your bottom line. They're just adding to the top line, but then taking all of that and you're having to support it with the same amount of money they're paying you. At the end of the day, in order for profit to happen, you have to have cash left over from your service offerings. And there's nothing wrong, and there should be no guilt felt by a business owner that they're requiring that when they work with a client.
Not at all. And I've always had the principle that I want to work less and make more. And I don't understand why people struggle with that, but it seems to make perfect sense to me. The less I can work and the more I can make sounds like a plan. It's a lot better than working harder and making less.
Right.
Which is always nice. What are some of the biggest success stories that you've seen with Profit First?
The first one that comes to mind, there's this gym owner, and they struggled with debt for years before they reached out to us. And when they started, right before their Profit First assessment, they had $80,000 in debt, and they'd been trying to pay it off for the last couple of years. So we sat down. They did not have a revenue problem. They had a cash management problem. And so we looked at it and said, look, if you're serious about paying this down, you guys are already making a good amount of money. You're more than covering your bills. You're living very comfortably. And from an owner's pay percentage standpoint in the allocations, they were kind of overpaying there. So we showed them, you probably need to pay yourself less. If you want to make more money, you need to grow the business better. So we found some money there. We went through the non-productive, productive expenses, and we set up the system allocating it just like Profit First suggests. And so within 6 months, they paid down that $80,000 of debt, which ultimately freed up it was like $6,000 of cash flow a month now that that debt's paid off. I mean, now they can go and serve their mission, and they have an extra $6,000 a month that they can hire another person to continue to grow their business. They can pay it to themselves to make more money for working the same amount. But ultimately now they're not handcuffed by that debt that they had been saddled with for 2 years. I mean, we see that all the time. And in general, one of the silver linings from COVID is that all of our clients, the gym owner clients who were running Profit First prior to March of 2020, all of them are still in business. And while they still have stress and, they're trying to figure it out, and of course worried about another forced government shutdown if that happens, they all have the cash to continue to survive because they ran the system and they got profitable and they set aside money when they could, because that is one of the benefits of Profit First. It helps you, it protects you from crisis. And I know the industry in general doesn't have that type of success rate. That we have lots of gyms in the industry that are closing, but none of them that were running Profit First. All those guys are still around, still serving people.
And it's so true. How you run your business when times are good and how you run your cash flow will determine how you survive when times are bad. And we are always going to have good and bad times. That's just reality. It's a different storm. Sometimes it's a solo storm. It's just you. Sometimes it's a big storm that everyone gets hit. You just don't know, but you can prepare, and you can even prepare now to continue to do that. It's not too late to implement. You can always implement and begin, and you start small and then you take steps, right? So it comes back to the whole gym story. Like, I hear these people tell me all the time, yeah, I'm going to start going to the gym when I lose weight. And I just laugh at them, right? Because they're never going to get there.
I need to get more fit before I come and exercise at the gym.
Yeah, right? Well, and it's an embarrassment thing sometimes, or it's an emotional thing.
Sure.
And money and that, they go hand in hand. And so I totally understand. And I get it. Any closing thoughts as we wrap up here?
If I think about the makeup of our economy, with 95% of it being small business owners, I'm always a little disappointed when the media is so focused on the Fortune 100 companies and all these publicly traded companies. But the reality is that our economy is squarely on the back of small business owners. So literally, the world needs small business owners, and they need small business owners to stay in business. I cannot think of a better system that is simple to understand, that keeps small business owners in business, than the Profit First system. And so wherever you are as a small business owner in your journey, if you don't feel like you have any profit right now, there are always steps you can take, little baby steps if needed, that can start getting the Profit First system implemented in your business. And I would just, like, the strongest word of encouragement that I can encourage everyone who's not currently actually running Profit First in their business to start somewhere, because really the world needs you to stay in business. And I would love them to really feel that weight of responsibility that we need you to stay in business.
Not only do we need you to stay in business, we need you to not be dependent on government to stay in business. We want you to have the freedom to make your own choices and survive whatever happens around you, so that, a year or 2 years from now, things will go great. And I will tell you this because it's been said, those small businesses that survive this storm are going to explode on the other side of it. They are going to take off because they are going to have so much less competition. So build your foundation now, because the time is coming that you're going to thrive. And we want to help you be able to do that. If people would like to find you and connect, what's the best way for them to do that?
My website is www.insighttax.com, and that's INCITETAX.com. So like to incite a riot. Because we really don't think the government's very good at spending your money as a small business owner. That's the best way. We have lots of content on our blog, a lot of tax tips. If you're looking for some year-end planning stuff, we have some blogs on that, a lot of free resources. So check us out.
And I will put a link to your website in the show notes for everyone to find. Thank you so much for joining us.
Thank you.
Can you believe that story? $30 million in revenue and they went bankrupt. Happens all the time. You've got to have cash flow and you've got to focus on the bottom line. Once again, another accountant who shares that many accountants and bookkeepers don't focus on profit. And that's the problem. They're not taught to do this. I have to admit, I also suffer from shiny object syndrome. What about you? It's a big part of what I do for my clients is to give them a little bit of accountability on that. I also love the concept of less customers and more profits. That's how I built my business, and you can too. Let's remember that taxes are the penalty for being highly profitable. And when we prepare for them, tax time is easy. After all, profit is not an event, it's a habit. And let's remember you don't need more resources, you need to be more resourceful and focus on the bottom line. It's like we talked about. You can't go to the gym and celebrate that with eating cake and ice cream, or you'll wonder why you're not getting anywhere. Remember, we think our way to a solution instead of spending our way to a solution. If you want a done-for-you service, you can have me or John as your Chief Profitability Officer because you have your zone of genius and want to focus there. I only work with a handful of clients so they can get my full attention. They are business owners who have or are growing to $500,000 to $5 million in revenue. You can use the scheduling link in the show notes to get on my calendar for a right fit call to see if I can help you. If you want to learn about living the life of your dreams, check out my other podcast, Richer Soul. As we close out today, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Let's thrive and grow. Have a profitable week.